Hey guys, Mike here. So today I'm going to talk about an investment idea I actually got from our friends at the Daily Upside. It's the 100% free newsletter I told you about a while back. And it's one of those things where I've been looking for stuff to put in my son's portfolio, and I wanted to check a few boxes. One was it needs to be something that we absolutely have to have, whether we're in a recession in this economy or not. It's something you just basically can't live without, right? And so this fits that criteria to a T. And so when I read it in the Daily Upside newsletter, I started doing my research and stuff. So I wanted to present it to you guys and get your feedback, see what you think about it. And so if you do want to sign up for the Daily Upside newsletter, again, 100% free. Just go down in the description right there, click on that link, put your email in, hit sign up. That is it, okay? Doesn't cost you a penny, all right? And again, you'll get articles there, which I've absolutely seen that the Motley Fool has used, Market Watch, all these other websites have used from the Daily Upside. So sign up for it. Let me know what you think, guys. I always like your feedback, okay? So without further ado, let's go ahead and get into this investment I am talking about. So guys, like I said, I saw this on the Daily Upside, and what it's all about is trash, man. Waste management, right? I mean, these companies have been killing it lately over the last 5 years. And you can see right here in the U.S. alone, we make up 4% of the global population, but we account for 12% of the global municipal waste. And you can just see the difference in population versus waste. I mean, we lead by a mile.
In 2019, the North American waste management market reached $208 billion. Strict environmental regulations, as well as a surge in the amount of waste produced, is expected to expand the market even further. By 2027, the waste management market is expected to grow into a $229 billion industry. Thanks to advancements in modern chemistry and the support from the government, landfills have seen astonishing financial success in recent years, raking in millions of dollars in profit. Private solid waste management companies like Waste Management and Republic Services have shown significant growth over the last 5 years.
They've learned how to be best-in-class businesses, and as they did that, what you saw was this growth occurring in new customer growth, new business formation linked with consumerism, consumer engagement, housing, and the garbage industry. Publicly traded stocks outperformed the market handily between 2015 and 2019. And underpinning it is a meaningful improvement in their free cash flow conversion.
So how exactly are landfills turning profit out of garbage? And just how much money can be made? Landfills make a majority of their revenue even before the garbage makes its way to the pile of trash. Through a tipping fee or a gate fee, landfills charge trucks dropping off their garbage based on their weight per ton. This fee acts as the lifeblood of most landfills across the United States.
And this is what we're talking about with the tipping fees, guys, continually increasing right here. As you can see, the national average has gone up everywhere in the country. It just continues to go up from 2016 to 2020. And then if you look at what is going on recently here, this is going from late 2020 into June of 2021. You can see a tipping fee skyrocketing from $55 to almost $60 a ton.
Private companies have also discovered new ways beyond tipping fees to turn profit out of their garbage. Landfill mining and reclamation, a process of extracting and reprocessing materials from older landfills, is one of them. In 2011, a private scrap metal company contracted with a nonprofit landfill in southern Maine to mine precious metals. In 4 years, they recovered over 37,000 tons of metal worth $7.42 million. Modern chemistry has also allowed landfills to be mined for energy projects, however, use the same gas to produce fuel and generate electricity for profit.
The landfill gas operations that are known as low or medium BTU, which are the predominant form of capture the gas, polish a little bit, turn it into electricity or steam, and then sell it, those are good return on capital projects.
And so hopefully that lays the groundwork and you kind of get a good idea of why these types of companies have taken off since 2016 because of the growth, because of the trend we're moving at in this country as far as going green and trying to be cleaner and stuff. And they've been able to take advantage of that as well. And, understand trying to get in this industry is very tough, all right? There's hardly any newcomers because it takes so much money to actually get into the industry, to break into it. Plus, it's so highly regulated. I mean, highly regulated. I mean, the top 4 waste management companies control 56% of this market, all right? They just go around buying up smaller waste management companies and landfills as they go. That's what helps them grow pretty rapidly, as they've done over the last 5 years especially. And so now we're going to get into the top 2 companies in the industry, and you'll kind of get to see the differences and stuff in them.
Two private companies, Waste Management and Republic Services, lead the solid waste management sector. Waste Management says it owns nearly 300 landfills across the U.S., while Republic Service says it operates just over 180 out of the 2,627 landfills across America.
As you see, guys, just looking at how the returns have been. Since 2011, you're looking at 357% return for Republic Services, Waste Management 341%, while at the same time, the S&P returned around 275%. And you can see by the chart, both these companies started outperforming the S&P after 2015. They just kind of took off and left it in the dust. And taking a look at the financials, you can see Waste Management first here with the revenues since 2015 and 2020 have grown steadily here. And the operating income has done the same thing, as well as they've actually doubled their net income from 2015 to 2020. And comparing that to Republic Services right here, RSG being the ticker symbol, you can see nice steady growth. Their financials do not look as good as Waste Management. We'll kind of get into that a little bit. Operating income, steady improvement there. And then looking at their net income, they definitely have not doubled their net income, but they've improved it quite a bit. And institutions love these companies. I mean, 78% ownership in Waste Management from institutions, as you can see right here. And you can see there's 1,608 institutions that actually own the stock. And going into RSG, 61% of their shares are owned by institutions. As you can see, 842 institutions. They've been around nowhere near as long as Waste Management, of course, so they're kind of the up-and-comer. And you can see, just looking at new positions for them, 87 or 8.6 million shares institutions have gotten into versus just sold out position of 43 or a minuscule 864,000 shares being sold. And so a lot more institutions are getting in than getting out. And one thing I like about both of these companies is since 2008, they have steadily bought back their shares and decreased their shares quite a bit, as you can see. And I tend to lean towards RSG as an investment because, yes, their financials don't look as impressive as Waste Management, but that's because they've been going through a heavy cash acquisition phase right now, which has actually got their gross margins up to around 42% because of that. And also, they have already been able to expand into 41 states, have 17 energy projects going right now that they're working on. They have the first solar panel compost facility that's in California, which is a great place to be. Can you imagine that? The most populated state in the country. And then on top of that, they have a $1.8 billion stock repurchase plan as of Q3 of this year. And so, that's something you like to see. And I just like the fact they're expanding very quickly and stuff like that, and gaining market share. And so, that's where I'm leaning. But either company is actually very good as far as injury because they're the two most dominant players there is. And the other thing, I was looking at too is I found this ETF, which is very impressive. And it's rare you see an ETF actually be able to kind of almost rival the stocks, the two top stocks in the industry. But this one does very well, and it does outperform the SPY as well. So I wanted to mention it to you because obviously that would be way less volatile because it is an ETF. And this is a VanEck Environmental Services ETF, ticker symbol EVX. Gross expense ratio 0.85%, net expense ratio 0.55%. And you can see here, it just gives you a lot more exposure. And of course, the top three are Republican Services, RSG, Waste Connections, and Waste Management. Then you got Ecolab. And the top 10 make up 60% of the ETF. And weighted, shockingly, or not shockingly, 94% of the stocks are American because we have the most waste. And if you look at how this one has performed, you can see right here, since 2017, it's right up there with the SPY. And then if you look, it actually started outperforming the SPY by about 7% over the last year. And then, me, I like to break it down in a spreadsheet for you. And I went back and looked at the charts to verify all these numbers. But you can see since 2016 through 2021 right now, there you are looking at Waste Management, 33%. At the same time, RSG was 31% in 2016. And there's the ETF performing right up there with the stocks, tripling what the S&P put out. And then if you just keep scrolling down, you can see it was right there with RSG in 2017. It actually had a negative, which 2018, if you look, was a disaster for the whole stock market. As you can see, the SPY was down 7%, even though the waste management stocks were actually in the positive. 2019, big comeback. They're all even across the board. The ETF actually outperformed RSG. But if you look from 2020 going into 2021, you can see that RSG is starting to gain momentum and outperform waste management, the ETF, and the SPY quite handily, actually. I mean, right now it's on track to return 50% if it keeps it up through December, which is a nice little return, for a trash company, right? And so, like I said, this is something I've been looking at, and it's not a hedge, but it's just one of those things. You got to have investments, and I want to have at least one investment, if not more, in my son's portfolio that, no matter how bad the economy gets, it's something you always have to have trash, right? I mean, it's going to at least perform okay or decent, not have these major swings, which don't get me wrong, if we go into a crash or a major correction, those stocks are going down with it. And I hadn't really decided if I'm going to go with RSG or the ETF, just because the ETF performs so well and it is much less volatile. If I do go with a stock, it will be RSG. But these are the type of things I'm looking, some of the things I'm looking at to put in my son's portfolio and stuff. So, just go ahead and want to put that out there to you. So hit the like, subscribe button if you got anything out of it. Let me know what you think about that, or if you're in any of these companies, or you have any information on it you want to share. And of course, don't forget, if you want to sign up for the Daily Upside, you hit that link down there in the bottom. Again, 100% free newsletter, doesn't cost you a penny, and you'll see some great articles delivered to your email every morning, okay? So I hope you guys have a great holiday, and I will see you Sunday.